Welcome to Stephen Johnson Stocks. My latest challenge is like how to do a video with teeth whitening strips in without looking like a dick. But it's just a limited matter of time because I'm going on a fucking date later. But really fucking touched and thrilled by the reception, the opportunity to do the Steady Trade podcast in front of all of you guys, all of the people that I met. Like, there's such a fucking amazing community of people, and it drove me and re-inspired me to think that by the next conference I have to be profitable. And I thought, well, how am I going to do that? Because these gap and craps aren't working. And I've tried everything. I've tried time off. I've tried only sticking to the best setup, and then I tried punishing myself or doing XLs with different stages of like, oh, I'm in infancy, I'm a baby, I'm an adult, and trying to cut back size and say, oh, I'm only going to lose 300. None of them worked. And then I came across a revelation of like, why don't I just look at other kinds of stocks? Why don't I try and study something else as a distraction? Stock related, so I'm still learning, but I'm not losing. And I started looking at other kinds of stocks, started really studying them, started charting them, started analysing how they do in the mornings. And then at the same time, if a fucking great gap and crap comes along that I just cannot ignore, then I have to take it. And that's what happened in this video, which I'll show you. And of course, when I first got off the plane, I took a loss on the gap and crap, and that's when I thought, fuck it, I'm fucking done with these. And then for the rest of the week, I dodged a lot of mediocre gap and craps that I would have been in had I not applied this strategy of just avoid them. I'll take the very best, because it's not working that well right now. I'll take the very best. Otherwise, I'm studying new ways in the market to make money. And I honestly think this is the solution. And I'm fucking thrilled. I'm learning, seeing new patterns, seeing this, seeing that, realizing new opportunities in the market. It's going to take us 3 or 4 months to get there. But meanwhile, I'm not losing while I'm learning, because I'm just watching, I'm trading tiny. I had a very good short on AMP, which I didn't show you. But when the gap and crap does come, boom, 700 bucks, boom, grand, because I know exactly how to play them. And I'll leave you with that. I'm on a good track. I hope you're on a good track. I fucking love you guys more than anything else in the world, and I can't wait to be profitable at next year's conference. And I'll be there. And hopefully be fucking shaking hands, taking pictures, jerking off, living the dream, having a fucking epic time with you guys. Now, I have updated the Excel here because I knew I needed to make some changes, and a lot of people have rules on the wall being like, don't short volume over 1 million on the first day and stuff like that, but I've gone a different route, and I've gone like, so for example, first of all, I'm up 140 on the week, on the month. But the other thing is, I want to know exactly what tickers I was trading them, what the setup was, and why it didn't work, so I can see straight away. I mean, I have the rules on the wall, but I can see, motherfucker, you lost 496 bucks because you shorted a stock that traded more than 1 million pre-market, and you didn't cut your higher day. So then I don't just have the rule of, oh, you've got to cut higher days. I've got the emotional reminder linked to a painful memory that makes me think, oh, I felt terrible then. I really have to cut a higher day for the rest of this week, the rest of this month, and for the future. And then it really makes you think the next time I'm fucking cutting that higher day, because I remember PTIE and I remember how I felt. It's not just a rule on a wall, it's a personal reminder for the entire month if you took that loss. So I mean, PTIE was, I'll go through all of these setups in the video, but it was a bit of a, I was back from the conference, I was jet lagged, and took a setup I shouldn't have, made a little mistake that turned into a big mistake. Started almost give up on like this setup, and I started looking at some higher price stuff. AMD made a nice short, made about 170 bucks on. Too much to show you in this video, so I can't show it. But then I got a little bit cocky with another stock and give it back, so that I was nearly like halfway back on that. And again, making silly errors. Luckily, AMPE came along, and I really smashed it with that one. Just a real golden nugget, which you very rarely see, which again we'll go into. I'll go through all of these stocks. But the key things that I need to work on is, I mean, to be honest, most of the gap and craps these days, like back end of like October, November, December, March, April, there's some really, even January and February, there's some good gappers there that were shorts. but I just haven't really seen them in the back end of this year or the mid to back end of this year. And if I don't see the best ones, I just haven't got to take them. And that's kind of the rule. So what am I going to do? So I've started looking at some slightly different kind of stocks just to occupy myself, just to stay like getting, learning more, being educated. And then that really kind of worked for us. I mean, although I fucked up on PTIE for the rest of the week, I was trading some other kind of setups, very small sizes, and then boom, AMPE come along, and I was like, yes, I'm in. I didn't like blow up my account, shorten IZEA, which was on the 4th, and then not have a trade on the 5th. So really proud of myself. Going to continue this path of really researching, learning, exploring new patterns, new kinds of stocks, and then taking like the one golden nugget of a penny stock that comes once a week and banging a grand on it. So this was a super cool trade. 626 bucks. Put me green on the week, green on the month. And I've really gone through, I've struggled with gap and crap so much recently that I've got to the point where I've started looking at other setups and even higher price stocks to only pick the best gap and craps. But today was, I just couldn't avoid it. And I'll show you why this is a great gap and crap and why two other gappers earlier this week were not good. And there's some subtle but very important differences. So AMPE pharma company, it's got 100 million float, and its shareholders, it's been trading relatively well in the threes until one day, boom, some really bad news. It goes down to the, opens in the 80s, comes down to the 60s here, and then it gaps down again. So you've got 100 million shares worth of holders who once owned a stock in the 284s, 285s, whatever, and you've got, if you look at how many got out here, you got 18 million of the 100 million, or those 18 million shares of the 100 million shares traded, got kind of sold off, and then another like 20 million got sold off. So that's 40 million are out. And then there's like another, say maybe 20 million here. But there's still like 40 million shares worth of people who are just fucked. So the minute the stock gaps up, and I see that there's no news and it's only traded 500,000 pre-market, like I kind of instantly know that it's going to go down because we've got the initial spike and then shareholders see it, they start selling, people look at the chart, they don't really want to buy it, and then we've got this kind of clear definitive triple top. And not just the triple top, but you've got this lower high, and I was short in on this lower high here because I was just like, right, this is the beginning of the downtrend, this is the beginning of people, shareholders starting to dump. And of course we had this nice, I was short a good 5,000 shares for $3,000 or something, took about 10%. I was short up here, and I was looking at yesterday's resistance line, which was here to kind of cover. And I was just covering it, I was covering little pieces. So I covered a little bit in the 69s quarter, a little bit in the 67s quarter, and I covered the rest down in the 64s. And then it popped up a bit, and I just took the rest off in the 65s. But basically, I used yesterday's support point, or yesterday's resistance as support, which it did hold all day, and ultimately then cracked. But the point is, look at the risk level, which is here. Look at your support level, and try and fill the gap. Try and fill the gap down, because you know all the shareholders are fucked. Think, where's a reasonable place? This might bottom or probably the next support level. But then the lesson extends because, like when you look at IZEA, this was a similar kind of gapper with a bad chart. But the difference with this one is it's kind of a low float. So if we go back kind of 2 years on this one, I mean, we can see this one gaps and fails too. If you go back to the other one, AMPT, gaps and fails, like this stock's got a history of like gapping and failing, gapping and failing, gapped and failed here. Like it never ever gaps and doesn't fail. And here it also gapped and failed. But the difference was with this stock is it's only a 9 million float, not a 100 million float. So the minute this trades a couple of million, like it's almost ready at the point where it's going to rotate its float. So on this day it traded 25 million, so it's rotated its full float 3 times. So with IZEA, there's so much volume and so much interest in the stock that you're like, well, where am I going to short now? if you'd maybe caught this nearly this double top, then you've got kind of half a reason to be in short here. If you've just caught the news and it's got a history of failing. But as the volume picks up and it makes this kind of curve, and a lot of these shorts are underwater. So if you think like some people were short in 241s because they're chasing it down because they think it fails every time. Some are short in the 240s, some are short in the 220s chasing. Some might even be short in the 2s thinking this is going right the way back down. The minute this squeezes round, you know that shorts are going to be panicking covering. As soon as it hits high of day, which is 258, you can see that the shorts are going to be covering. And you've got this unnecessary squeeze. So if you've got a 240 average and it's hitting, and then you think I'll short the spike, I'll short a 10% spike. Well, 10% spike's about, or an 8% spike's about 255, 260. You're stopping out here. Say you're shorting 7-8%, think I'll short the little spike in the field, because on average data shows that they do spike 7-8%. But there's so much volume, there's so many shorts panicking, there's some people taking it long because it's high volume, it's low float, and it just rips all the way up to the 3s. So if your entry pre-market is anywhere in the 230s, you're down 30%. If you're shorting the spike, you have to cover the high of the day. Most people will cover the high of the day at 255. Again, you're kind of fucked because it goes higher. And I mean, there's an argument to say that if you've got the right broker and if you've got the borrows, look for the head and shoulders. And the head and shoulders should symbolize that it's going to end. Because it's unlikely that it's going to like run massively parabolic green with no news. But most people aren't going to have the shares. If you're with IB or something like that, or A-Trade, you have to take the shares pre-market and then you're squeezed. So unless you've got a good broker where you can notice like there's the shoulder, there's the head, there's the shoulder, start shorting the backside of the move, and then take it all the way down. I mean, yeah, then you've got like, say your short entries 278, you're risking the high of the day in the 3s. Then you're thinking I'm taking 278 from the 3s, I'm risking 20 cents, and I'm making like from the 230s from the entry to 80s, I'm making 50 cents for risking 30 cents, 1.5, nearly 2 to 1 risk reward. That's fine. I mean, maybe you can sell a portion and then sell the rest further down in the 180s, 190s, even the 180s. But the point is, there's not a safe entry on this. And then PTIE, which was actually me lost that stop as being more green on the month, was kind of a whole nother story. Now, PTIE was the kind of the case where the chart is shit. It's the exact same chart as AMTP, right? Apart from, which is where I was jet lagged, I was just coming back from the conference. The difference is, if I can get some arrows, it did gap up and run here on 30 million shares, and then it gapped up and ran here. Well, no, this it gapped down. Sorry, that's a mistake. But then if we go closer into the chart, even recently, like history doesn't repeat, but it rhymes. But the thing is, this is the key mistake I made, which I'm kind of mad about, is I saw it gapped up from the 110s to the 130s. So it was up 20% on 20 million volume, and it got up to the 2s. It got as far as the 224s. So when I saw a similar gap up in the 2s, I was thinking, if everyone, say for example, everyone bought this, can't remember the float, I think it was about 20, 30 million, so it's 20 million shares traded. If everyone bought this, you've got an average position, say like if I can get some arrows again. Some bought here, some bought here, some bought here. So you've got an average of maybe 140s, 1.2s, 220s. Maybe you've got an average of the 170s, right? So I was thinking there's like 20 million, on average, 20 million shares worth of people in at 170. So I thought this time when it gaps up, because it's gapping up to 122, 123, 124, I think everyone's still kind of underwater. But where I kind of fucked up is I didn't look at the buy-in pre-market. There was a couple of million buyers pre-market. And if there's enough buyers, like this traded 57 million, that 57 million not only allows all of these people who are trapped to get out. So say all these people are selling who are trapped, all these people are thinking, yes, I finally got out, because obviously this stock, everyone's in an average of 170. Gap down the next day, everyone's fucked in the $1 range, right? So everyone's underwater. So maybe these 18 million shares worth of people, they were all selling in the 120s, 130s, 140s for profits. But then there's 60 million people, shares worth of people that are interested to outset and outweigh the 20 million people who are uninterested. So this huge volume candle, 90% of volume as buyers, outweighed the selling pressure, which meant my theory was then flawed because I need a couple of million, 3 million, 4 million of shares worth of buyers, and then the sellers are like 20 million, and then the sellers outweigh the buyers and the tug of war and the stock goes down. There was too much buying interest, there was too much volume, and it actually let shorts like me get squeezed and squeezed and squeezed. And the way I traded this, and obviously it's fucking come back down again, like this scummy cons penny stocks are. But the way I traded this, if we just quickly go back, and look how high it went. It went to the 290s. I nearly took this short as well. I nearly took it short in the 260s the next day. I was like, fuck it. And then you could have banked like $2 a share. But the thing with this is, fair enough, it's quite strong pre-market. If we just look intraday, I was short and risking off the pre-market highs in the 130s. So you've got this top here. And I took a small position here at the open. And then I took a small position here, thinking it was going to be a lower high. But this burst through. There was too much volume. You can see the little slight selling, 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 selling. But most people are holding on to the positions. Then boom, there's a load of new buyers buying this double bottom here, which I've got to be more careful. I've got to watch this double bottom more. And then when this broke out, I tried to hold a little bit into the 130s and 140s. Ultimately, I cut in the 140s, which is ridiculous. It's absolutely ridiculous. And then I actually, when I saw it coming down, I added again, stupidly, because that's just revenge trading. And then I cut it again when it broke in the 145s. But seeing that, because I've got a 500 max loss, I'm like, I'm not losing more than $500. I lost 496. Look where I cut, 141s. Look at where other shorts cut, as far as the threes. So I nearly was 100% worse off. So you've got a $5 position, you just lost $5. I should have. Had I have cut it, I should have. I could have lost about $60 here because I was short here. I had an average of about 128. If I'd have cut it to the 131s, 132s, 133s, I was down $50. Let it right up here, lost 500. Had I have let it right all the way to the top, would have lost about $6. Back in the day, I would have lost $6. Now I'm losing 500. I'm green on the week. I still fucked up, but I'm not as bad as I was, and I've got to take that as a positive sign. Thanks so much for watching. We'll keep it short, but I've just got a challenge for me. I've got a challenge for you. My challenge is, like I said before, I feel like I've got the right strategy finally, and it's took forever, but it's just learning other stuff in order to not lose what you're fucking already kind of good at when it's not working. So if I can just apply this, my mission now is to be profitable from this October to next September, to stay fully profitable for a full year until Sykes' next conference. That is my mission. I would love you to take this challenge with me too, especially those who were at the last conference and plan on going to the next conference. And meanwhile, I just want to say it was fucking awe-inspiring to meet you guys in the conference. It was fucking such an amazing, eye-opening privilege to what life is really about, because we're isolated sitting behind computers, and to meet everyone and to be like a small part of everybody's life in the little box, in your ears when you're in the gym, on the podcast, on Steady Trade, like, it was phenomenal. It's more than 10 reasons to live, and I would cry tears of blood from my heart if I could, to show metaphorically how much I fucking love you guys.